As per latest report, ED, that is Enforcement Directorate, has frozen the account of more than 100 fintech firms in India. Majority of them were into the lending business. Then RBI has recently issued a notification to fintech firms or non-banking institution forbidding them from the buy now pay later service. So of late there's a huge surge in buy now pay later business where a lot of fintech companies offering such services. And then there was a news on Vault, a cryptocurrency trading and lending platform suspending all trading activities from its platform and even suspended withdrawals. That resulted in investors' money getting stuck in the platform because they can't withdraw their money. So these developments have created big question mark on new age fintech companies. Hey everyone, my name is Sahil and this is my Personal Finance Academy. Over the last few years, there are many new age fintech companies that are now part of our financial life and we use them in our day-to-day life for investing our money. For example, companies like Zerodha, Upstocks, Grow, IND Money, Wintwealth, and the list goes on. And after the recent negative development on fintech companies, there were a lot of queries where investors are asking, can these fintech companies shut down? And what happens when these companies shut down? So in this video, I have tried to answer these questions. Now there are various categories where fintech companies operate. The most common and popular category is stock trading platform and mutual fund investment platform. Then you also have platforms that invest in bond market, then you have lending apps and even new age buy now pay later companies as well as neobanks. So I'll try to look at various categories starting with the most popular category of stock and mutual fund platform. Alright, let's get started. Now many investors have started using the new age zero brokerage platform like Zerodha, Upstock, Pesa, then recently launched Mstock, etc. You also have intermediate platform like Small Case that help you invest in stocks via their partner broker. Now try to understand this. When you invest in stock market using these platforms only act as an intermediary. They do not hold your stocks. Your stocks are held in your demat account, which is either with CDSL or NSDL that fall under the purview of Indian Government Ministry of Finance. On top of that, the security market is highly regulated by SEBI. So even if hypothetically assuming that these new age stock broking platforms shut down, then also your investment would be safe in demat account with either CDSL or NSDL. Yes, here one thing you need to ensure is to look at the brand name and their history before opening an account with stockbroker because there are many stockbrokers in India. And since majority of them are private companies, their financials are not available on public domain. But you should still look at the brand name and past history before opening an account and try to stick with good reputed firms. Now here, I want to highlight one fraud that happened a few years ago with Karvy Stockbroking Limited. In November 2019, Karvy Stockbroking Limited pledged securities lying in the demat account of its client without their permission to raise funds from multiple banks and financial institutions. These funds were then diverted into other Karvy Group companies like Karvy Realty. So they basically misused the power of attorney given by its client and transferred the share from client account into their own account and showed these accounts as their own security to lend money from various banks. Although since security market is regulated by SEBI, it banned Karvy and later there were news on investors started receiving their money from NSE IPF, that is Investor Protection Fund. However, that scam was an exception. In general, you don't need to worry as first, security market is regulated by SEBI and second, your stocks are held in demat account. And third, if due to any reason there's a fraud like Karvy, then NSE has set up an Investor Protection Fund to provide compensation. Although if you end up investing in a specific stock that goes bankrupt, then you will lose your money. And there have been cases in the past where stocks stand as high as 90% and some even got delisted from exchange. So make sure that you invest in quality stocks. Now recently many investors have also started investing in US stock market using apps like IND Money or Vested. Now US stock direct investment works differently from Indian stock market. Fintech companies like IND Money or Vested act as an intermediary where they have a broker partner in the US. For example, IND Money has a broker partner called DriveWealth who is a member of FINRA, that is Financial Industry Regulatory Authority, and SIPC, that is Securities Investor Protection Corporation. So if IND Money goes out of business, their US broker DriveWealth will ensure that you can access your portfolio through them. And DriveWealth is a member of SIPC that protects customer if the firm fails financially. It provides coverage up to $500,000 per customer, including a maximum of $250,000 for cash. That's a good amount of money. And in case both Andy Money as well as Dry Wealth miraculously shut down, your portfolio can be traced with the companies whose stock you have purchased. In that case, you may either liquidate your fund entirely or choose another US broker partner apart from Dry Wealth to continue trading. I hope that helps. Now let us try to understand how mutual fund platform works and what if they shut down. So there are many popular fintech companies that help you invest in mutual funds, including Grow, ET Money, Kuvera, etc. So in case of mutual fund platform, again, they only act as an intermediary to invest in mutual fund of a specific AMC, that is asset management company. So when you invest in mutual fund, you hold the mutual fund of that particular AMC. It means even if the mutual fund platform fail, your investment is safe with AMC. But what if the AMC itself shut down? Or the AMC shut down a particular mutual fund scheme? So first of all, it is not that overnight your AMC will shut its shop and exit. As mutual fund investment is also regulated by SEBI, there's a proper procedure and guideline before the AMC shut down. Historically in India, if the AMC has shut its shop, then it has been taken over by another company. Although it is possible that a fund house simply return your money at market value when it shut down, but that has not happened so far in India. For example, Reliance Mutual Fund by Anil Ambani was acquired by Nippon Group from Japan and was renamed to Nippon India Mutual Fund. But there have been a case in the past where a popular fund house, Franklin Templeton Mutual Fund, closed 6 of its debt mutual fund scheme with cumulative asset worth 25,000 crore rupees. So during 2020 April, Franklin Templeton Debt Fund faced serious liquidity crisis when investors jumped to exit their money due to COVID fear, and it had to freeze all transactions. The reason being that Franklin Templeton fund managers invested in bonds of some high-risk companies with low credit rating, with a greed to generate higher returns, and some of those companies eventually defaulted. Although I was reading an article that mentioned that the fund house has refunded around 71% of its investor money so far. So the lesson here is, don't blindly invest in any random debt mutual fund just because it is offering high return. You should check the credit rating of the bonds where the debt mutual fund invests. Now let us discuss bond platform. What if the bond platform shut down? Of late, there are platforms that help you invest in bond markets directly. For example, you have Wintwealth, Golden Pie, etc. Again, they are just intermediary and they help you invest your money in the bonds of those specific companies. So here the risk is, what if the companies whose bond you have subscribed fails? Yes, that can happen, and that is the reason you should make sure that you don't get too greedy with high fixed return, because in bond market, companies with high credit rating like AAA offers lower returns, whereas companies with lower credit rating would offer you higher returns, and investors generally get lured by those high returns. However, as the credit rating decreases, the risk of default increases. So make sure that you understand the credit rating of the company and invest in companies with high credit rating. Majority of people in India end up losing money by investing in companies that offer high fixed income return. And when the company default, investors lose their entire capital. Although in case of Wintwealth, they offer senior secured bond, where in case of default, senior secured bondholders will get the priority at the time of payment. But be careful with investment in corporate bonds. Don't get too greedy. Greed was exactly the reason why cryptocurrency trading and lending platform Vault had to stop all its transactions. People invested in Vault because it offered fixed return just like FD, and that too in the tune of 12 to 13%. Now on one side, where top private lenders are just giving 5 to 6% fixed return on their FD, Vault became a lending platform where it offered fixed return on cryptocurrency investment of as high as 12-13% to retail investors and lended that money at even higher rates. Eventually, some of its top clients defaulted on debt payment, including 3 Arrow Capital, and there were heavy withdrawals after the crash of cryptocurrency. Hence, Vault had to suspend all transactions and investors' money got stuck. So investors got trapped due to greed for high return, because at the end of the day, majority of investors neglect the risk aspect of investment. They only look at high returns and they forget that high returns comes at high risk. On top of that, unfortunately, crypto market is not regulated in India. So unlike your previous cases where SEBI intervened and helped its investors, nobody knows what will happen with investors' money at Vault. In fact, that was the reason behind the fall of Yes Bank in the past. Yes Bank offered corporate loans to companies with low credit rating with an ambition to grow faster. And when those corporate defaulted on payment, Yes Bank collapsed. Likewise, there were many cooperative societies that offered high interest rate and eventually defaulted. In fact, RBI has been very strict with new model of buy now pay later, that is BNPL model, where the firms are giving the option to buyers to buy now and pay later in the form of EMIs, and that to zero cost EMI. They basically want to earn from buyers when they default on payment. The big risk that RBI found in this model is that some of the companies offered BNPL services to customers without any credit history. So there are high chances of those customers getting defaulted. Likewise, there are a lot of peer-to-peer lending apps with returns as high as 12%. And remember that majority of them have started recently, so they don't have any history to check if they can default or not. But high fixed returns come at high risk. So make sure that you understand the risk aspect before investing your money. So in this video, we discussed what happens when your fintech company shut down. These days, there is a huge surge in new age fintech companies in India. So it is very important to select the fintech companies after a thorough research. Please note that I have discussed only the popular fintech companies, as it won't be possible to cover every company. Just to summarize, security market is regulated by SEBI and your stock investment are held in Demat account, which is safe with NSDL and CDSL, and mutual funds are held with AMC. The biggest risk of default is with lenders that offer high fixed interest rate. They have a high chance of default. So make sure that when you invest in fixed income instruments like bond, you do a thorough research and ensure high credit rating, brand name, etc. And of course, when you invest in stocks, don't just invest based on tips. Do your research before investing your money. Friends, I've tried to answer these questions in the best of my knowledge after a thorough research, but I might get wrong in a few cases. There can still be outliers and exceptions where companies find a new way to fraud investor. So make sure that you do your research before investing your hard-earned money in any of the fintech company. And do not invest your money simply out of greed. Now tell me in the comment which fintech company you prefer to invest your money. I hope you'll find the video useful. I'll see you in another video. Till then, take care.